Markets opening in the red. Sensex down by about 400 points, Suyash, this morning.
Yes, Shweta. So Indian markets had a muted opening today. Both Sensex and Nifty are down about 0.5% each. Sensex has slipped below the 65,000 mark, although Nifty is defending the crucial support level of 19,300. Now, the weakness today is on the back of bearish sentiment in the global equities. Also, investors are waiting for the inflation print, which will come out later in the day. So now retail inflation is expected to exceed the 6% mark, which is way above the tolerance of RBI.
Yes.
And this will be because of higher food prices, as we have seen over the past few months. Tomato prices and then vegetable prices have surged a lot, and this will have a negative impact on inflation, and the print is expected to come at 6%. Now Sensex is down about 0.58% currently. Nifty is down about 0.86% and 19,309 levels. Mid cap and small cap indices are also trading in the losses. They have underperformed the markets and they are down about 1.22% and 1.68% in today's morning trade.
All right. Is this the much needed correction in the market? Is it the start of it, or are we at the bottom of it? Given Friday's profit booking and this morning.
So this was actually the third straight week of losses for the Indian markets, and we have seen that Indian markets, at least at the higher levels of about 19,900 levels, faced a lot of resistance. And from there we have seen profit booking, and in the last couple of weeks they have been consolidating in a tight range of about 400 points. So 19,200 has emerged as a support for the Nifty, and 19,800 has emerged as a resistance for Nifty.
Okay.
Although now we are seeing that in the midst of negative sentiment towards global equities, Indian markets is underperforming even the emerging markets, and it seems that the Goldilocks situation of Indian markets is currently under question.
Oh, big words coming in from him. Shweta, the Goldilocks situation of Indian markets. Because Suyash, I think Shweta and I have been talking about this even before we began. The question always is, when you see the markets coming down after the kind of month of July that we had, every day was a high after high after high. We're into August, 2 weeks into August, every week we've been talking about a fall in the markets, closing in the red for the day, for the week. And when we began July, Suyash, all three of us were discussing the same thing. When is this correction going to come? Because so many market experts predicted corrections. So the first question, we have market expert joining us as well, Shweta, but if with your permission, simple question.
Yes.
Are we at the beginning of a correction, of that expected correction?
I mean, as far as the cues go, it doesn't seem that big downside is in the offing unless and until there is a big trigger for the markets, because we need to understand Nifty and Sensex have been defending that support levels vigorously, and that's where, at least as far as if there is not a major trigger, we should not see profit booking, but we can see consolidation over the next week or so.
Okay.
All right, some sort of consolidation expected in the week or so. We are, of course, hoping to get our markets guessed very, very shortly. But let's quickly also move on to earnings. Big earnings that we're tracking this morning. What are the expectations with ITC and Vodafone?
Yes, Shweta. So let's start with Vodafone. And Vodafone, as you know, the troubles are expected to continue now.
Just like their signals. Just like the phone signal, the troubles just never stop with Vodafone Idea phone signals.
Now Vodafone is expected to report losses, although the losses...
Let's do ITC first. Let's pull up those numbers for ITC.
Fair enough. ITC, a conglomerate that sells literally everything under the sun.
Absolutely. One of the perhaps biggest FMCG players. Numbers on our screens, Suyash. Numbers flashing on our screens. Let's have them back, please.
Now, ITC, Shweta, is expected to report a double-digit growth in net profit for the quarter ended June, driven by a steady growth in the cigarettes and the hotel business. Now, net profit is expected to rise about 15% on a year-on-year basis, although revenue will correct marginally by about 1% on a year-on-year basis to about 17,152 crores from 17,325 crores in the year-ago period. Now, the growth in profit, although the top line will be muted. Now, this is because of ITC's higher dependence on the cigarette business. Now, despite a scale up in the FMCG business, cigarette continues to constitute about 70% of ITC's profit and about 45% of its revenue. So that is expected to be a major drag on the top line of ITC, although margins are expected to improve by a 430 basis points on a year-on-year basis to about 37% in this quarter compared to 32.7% in the year-ago period.
All right. I'm not sure if you have Vodafone numbers just as yet, but we have Avinash Gorakshakar, Director Research, Profitmart, Securities, joining us here on the show. Sir, thanks very much for taking time out. I want to first begin with markets this morning, opening in the red once again, alluding to what my colleague Krishna here said. Is this the beginning of a correction?
Yeah, good morning to all of you. First of all, I think, the markets are now into a consolidation, scenario. Most importantly, we are still in the midst of earnings season. So I think the broader market is unlikely to go beyond 20,000 for the time being. And what correction we are, seeing is largely because for the last week or 10 days, we've seen a consistent selling from the FIs. I think after the US Fed policy and from the recent RBI policy, it's very clear that there are some concerns emerging that inflation has yet not peaked out. There could be a little bit of pain on the inflation side. And my sense is that typically, I think now at this level of the index, the incremental alpha or the incremental upside to many sectors across many companies is unlikely to be significant. So I think you're going to see a lot of profit booking coming in. Maybe at 19,200 or 19,000, 300 odd levels, the market could stabilize. And this correction is indeed a healthy kind of correction because probably, investors who missed out the rally earlier could get quality companies at decent valuation. So it's nothing of a kind of a panic scenario. But yes, I think the markets could undergo a little bit of pain in the very near term.
Ask you just a supplementary question to what Shweta asked. I always felt that consolidation is a sweetened word for correction. So my point here is that, how long are we going to see this correction? We're seeing support levels for Nifty at 19,200. With the kind of news that's coming in terms of FI outflows, interest rate environment in the US and India, is there going to be a prolonged period of correction, and will Nifty and Sensex test their current resistance levels and go below them?
Yeah, I think if you have seen the way the markets have gone up since April, I think they went up significantly in a very short period of time. So I think, the law of gravity tells us that whatever goes up very fast comes down also equally faster. So I think one should not be surprised that for the next, say, couple of weeks at least, or maybe even for the next 3-4 weeks, the markets are will undergo a little pain. A lot of easy money has been, generated by investors. New issues, IPOs have also come up quite significantly. So I think to a certain extent, there could be a break in the kind of momentum which all of us have been used to. So I think there's nothing fundamentally wrong, but I think this healthy profit booking could be a little painful for the next, say, 2 to 3 weeks. And after that, hopefully, what kind of news flow comes on the macro front, what kind of news flow comes on the company specific front is going to drive prices. But valuations have definitely gone skywards, and I think some correction was necessary. So I think even if the market corrects, I think this is a very good time for investors. The speculator may not make any kind of big money here, but the investor who puts money in good quality companies and patiently waits would definitely see a decent alpha coming in over the next, say, 12 to 15 months.
Avinash, the markets, as you said, could be under pressure for the next month or so. So, will it be prudent for an investor to, initiate a a sector-specific approach at this point of time? And if so, what sectors can one invest in?
No, I think one has to be a little stock-specific as well as sector-specific. And I think, the sectors which actually should do well are all the domestic facing sectors. I think I would avoid the export facing sectors because still there are significant headwinds from US and Europe. So I think, domestic sectors like automotive components, capital goods, real estate, building products, typically cement, these are sectors which we feel are definitely poised to do quite well, considering the kind of massive opportunity in infrastructure. Another 2 key sectors could be, on declines would be the railway infra theme, the defense theme, because these are also large pockets of opportunity over the next, say, 12 to 15 months.
What about consumption stocks, Avinash? Because we have seen that consumption stocks have posted a good set of numbers, at least as far as the bottom line goes, but the volume has disappointed the streets. Now, the reason for that heightened profitability was because the raw material prices had decreased, and primarily because the crude prices are falling. Now that crude prices are going back up and the demand is not there, profitability is expected to take a hit. So, will we see some profit booking there?
Yeah, I think first of all, most of the consumption stocks are not priced, very cheaply. They're available at fair to expensive valuations. So if you look at Hindustan Lever or typically a Godrej Consumer, these companies have done decently well in the quarter one. But as you rightly pointed out, the volume growth has been quite disappointing. Crude prices have started moving up, and inflation still remains at elevated levels. So I would believe that maybe at little lower levels, that could be a good opportunity to accumulate such branded consumer bets. But my sense is I think it's better to wait for the September quarter and obviously then take a call on the monsoon factor plus the inflation factor. And I think that would be a better time to look at these companies. At these valuations, the risk reward bet, I wouldn't be surprised, would not be that attractive for investors, because these are fairly expensive kind of stocks where the risk reward is already built in into the price, at least partially.
Now, Jeffries has flagged that and asked investors to be cautious about Indian markets in light of crude rallying, China gaining some traction, and inflation being a concern. So, do you agree with the assessment of Jeffries?
Yeah, I think clearly, you have to look at the broader market. Overall, if you look at only the index-based stocks, then I think definitely most of these index-based stocks from the Sensex and Nifty are fully priced. But if you look at the broader market, there could be pockets of opportunities where, the risk reward and the valuations could be in favor of investors. And I think, inflation is going to be a major concern. In fact, in the recent RBI policy also, although the rates were kept status quo, on the CRR front, what the RBI has done is clearly to control liquidity. So I think inflation is something which probably post monsoon we'll get a better sense as to what is the kind of number RBI is comfortable with. But I think at least for the next 2 to 3 months, you could see a little bit of consolidation in the markets, considering that April onwards the markets have been on a tearing runaway rally. So I think this correction was anticipated, and I think one should take a slightly longer term approach here. There's nothing to worry, but yes, in the near term, I think the markets would be continue to be little volatile and sluggish.
Nash, we just discussed this as well. Big earnings coming out for the day in terms of the form of ITC. Profits up, revenues marginally down. Great improvement in margins as well. Profits up, revenues flat. Great improvement in margins. How do you view the ITC results per se? Still heavy dependence on the cigarette business. Talk to us from ITC's results and as well the stock going forward.
No, I think, see, ITC stock has seen a runaway rally, largely because of now the factor that the hotel unit is going to be demerged, by next year. But I think coming to the operational earnings, I think one major disappointment is that the top line growth has been almost flattish and the margins have improved. So I think cigarettes are definitely, currently almost 70 odd % of its revenues and profits, come from the cigarette business. So I think what kind of outlook and what kind of volume growth numbers are shared by the management is very crucial to hear. The numbers are definitely on the bottom line quite positive, but I think the markets would like to get a hint as to what is the kind of incremental growth from the other divisions, especially the hotel business, the paper business, the FMCG business, because these are all additional growth drivers. And I think any positive commentary on that would obviously be a little bit sentimentally positive for the stock. Longer term, we continue to be positive. We believe that any decline in ITC share should be used as an opportunity to accumulate. There's significantly deep value in the stock, but yes, I think the time frame has to be a longer time frame. ITC has been a slow mover, so probably numbers may not immediately get reflected into valuations. So I think you need to put in a little more time here. But yes, the conviction is strong that this company should comfortably deliver very strong numbers for FY24.
Avinash, ITC, talking about ITC was also in the news, a month ago with its, reports that it's going to demerge its hotel business. Although the market usually, the news of demerger should be taken positively because ITC as a company can focus more on the hotel business if it's, if it is a separate entity. The market did not react very positively to it. Any reason for that?
No, I think because clearly, in case of the ITC demerger, ITC clearly said that they would continue to hold about 60 odd % in the new entity, and the remaining 40% would be, obviously be, offered to the other shareholders. It means that clearly it was not a clear, plain vanilla kind of demerger. I think that was something which disappointed the markets, and I think the overall fair value which most of the analysts have given is that the ITC share fair value in the overall ITC share is not more than 30 to 35 rupees. So I think that is one reason why, despite being number 2 player after the Taj Group, we saw a little bit of disappointment once the deal was announced. Obviously, once the stock gets listed and obviously we see traction on that kind of business, At that point of time, we could see some re-rating. But at least as of now, there's no major excitement on that event after ITC clearly stated that almost 50 to 60% of the combined of the new entity would be controlled by ITC.
Let's move on to another earning that we'll be tracking this afternoon, and that is Vodafone. Vodafone as a business has been losing money, has been losing subscribers. We'll play up the numbers as far as expectation is concerned. But how are you looking at Vodafone right now, Avinash?
No, I think, see, Vodafone India has been on a kind of a falling kind of a market share scenario from a very long time. We have been seeing that both Bharti and Jio have been grabbing market share, have been grabbing customers. And on the other side, Vodafone has been losing customers. On the capital structure side, the company seems to be in a very big trouble spot. I think they have a gross debt of almost 1,23,000 crores. They have a negative net worth. And I believe last year they made a net loss of 29,000 crores. So unless they get funding, and that too funding very quickly, either from the existing management or maybe from a strategic investor, which the markets have been hearing for a very long time. In fact, the market rumors have been that Tesla could be interested in Vodafone, and that was why the stock, actually saw a smart bounce. But these are unconfirmed reports. My sense is operationally, the company has been doing very badly in terms of the cash flows, in terms of the debt on the books. So I think it's better to wait and watch. There's no need for any investor to make in a fresh entry here. The numbers this time also are going to be pretty bad, considering that April, May, June, they lost a lot of the customers to both Jio and Bharti. So I think, this is something which the markets are uncomfortable. If the company continuously loses market shares, has a huge debt on the books, then I think recovery seems to be a very tough call from here on.
Recovery seems to be tough, and this is a story that we've been discussing here. Vodafone losing business to the duopoly that is emerging in the telecom sector by the way of Jio and Airtel and Vodafone. Of course, its numbers not looking that great for the months gone by and for the months coming ahead, because there is no strategy, Krishna, that is in place right now. Talks of Tesla buying a stake, talks of government, increasing its stake. All of that, of course, continues to augur well temporarily for the Vodafone stock. There is a bounce back, smart bounce back, as Avinash put it, but then again a fall therefore in the fortune. It continues to persist for Vodafone. Let's quickly take a look at the earnings preview that is on your screens at the moment.
So
quickly run us through the numbers, Suyash.
So actually, it's a net loss figure. So Vodafone is expected to post a net loss of about 6,895 crore, which will be less than the year ago loss of about 7,297 crore. So about a 15% contraction in losses, although on a sequential basis the losses are expected to widen. Now revenue on the other hand is expected to go up marginally because of the increase, because of the improvement in the ARPU, and it's going to be it's expected to be up about 1.5% from 10,413.79 crores to 10,570 crores. Now the brokerages are expecting Vodafone Idea to lose about 3.2 million subscribers in the quarter gone by, and they expect a 1.7% quarter-on-quarter increase in ARPU to about 137, which is a far cry, if you remember, from Bharti Airtel's 200 figure. So, yeah.
Absolutely, a very far cry from Bharti Airtel's figures there, but Vodafone juggling and hoping to keep its fortunes intact, whatever remains of it.